Aotearoa, and welcome to Thursday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz. And today we start with news. The fall of the US dollar is driving some renewed realignments. To start, we should note that gold has surpassed US Treasuries as the world's largest reserve asset globally for the first time in 30 years, driven primarily by rising prices, sharply rising prices in fact, and some aggressive buying by some mainly autocrat central banks. Elsewhere in the real economy, the private US ADP employment report for December rose by 41,000 jobs following a revised 29,000 retreat in November. The December result was slightly less than the forecast of a 47,000 job gain. This huge sample has been in a yo-yo pattern since mid-2025, and over that 6-month period they've reported a net gain of 129,000, but almost all that gain was in August 2025. We get the December non-farm payrolls report on Saturday, and it is expected to show a gain of 60,000. US job openings, though, shrank in November. They fell by 300,000 to 7.14 million in the month, the lowest since September 2024, and well below market expectations of a good gain. The ISM Services PMI rose for a third consecutive month in December, well above what was expected due to more positive holiday season trading. It was their best services sector PMI since October 2024 and broad-based. This was quite a different view to yesterday's S&P Global Services PMI, which told the inverse story. Meanwhile, the US released a catch-up factory order data report delayed by their shutdown. This report for October revealed orders fell 1.3% from September to be just 1.6% higher than a year ago, far less than current price inflation. A driver of this pullback has been lower aircraft orders. Meanwhile, the New York Fed's Global Supply Chain Pressure Index jumped rather more than expected in December, a clear signal that American importers are feeling rising stress, although nothing like its pandemic stress. In Canada, their widely watched Ivy PMI turned back to an expansion in December, and they reported lower cost pressures, even if they remain elevated. In China, their central bank said it'll cut the reserve requirement ratio and interest rates in 2026 to keep liquidity up with a loose monetary policy. Meanwhile, their foreign exchange agency explicitly committed to effectively guaranteeing foreign exchange access to all market players, a move to reassure businesses of currency liquidity amid the global pressures. And China's foreign exchange reserves rose to $3.358 trillion in December, a 4.9% or $160 billion US dollar gain from a year ago, boosted in part by a falling US dollar. But next week, China will announce a $1 trillion US dollar trade surplus in the same period. So it does make you wonder where the difference has gone. Clearly there are large capital outflows. China's gold reserves, though, rose more than 55% in 2025, largely due to the rise in price, but they also added volume from local mining. Another consequence of this rise in reserves and the swelling trade surplus is that the yuan is appreciating, especially against the US dollar, but not significantly against the Aussie dollar or the New Zealand dollar. However, the appreciation against the US dollar is crucial because most of the world's trade is conducted or priced in US dollars. Taiwan said its CPI rose 1.3% in December from a year ago, but its producer prices fell 2.6% on the same basis. In Europe, they said their CPI was up 2% in the euro area in December, so a slight dip from November. So it is now at the ECB target. The range was from 0.7% in France to over 3% in frontline eastern countries. Germany was up 2%, Spain up 3%, and Italy up 1.2%. Australia's CPI inflation slowed to 3.4% in November from a year ago, down from 3.8% in October. This was a bigger fall than expected, but it is still above the RBA's 2 to 3% target range. Still, this will ease the pressure on the RBA and push back any thought of rate rises. Housing was up 5.2% though, food up 3.3%, and transport up 2.7%. As the electricity subsidy rollback fades, that is reducing pressure overall. And Australian building consents rose sharply in November, up 15% to 18,400, a rise dominated by apartment approvals. And while we complain about high prices for dairy products and for meat because of our low dollar and high international demand, get ready for much higher fish prices too. The West Australian government has permanently closed its snapper fishery, and fish wholesalers there are now flying in New Zealand snapper to fill the shortage. The US Treasury 10-year yield is now just under 4.14%, down 4 basis points from this time yesterday. Then the price of gold will start today at $4,458 an ounce, down $29 from yesterday. Silver is down $4 to $78 an ounce. And American oil prices are down $1.50 from yesterday at just under $56 a barrel, while the international Brent price is now just under $60 a barrel. Both are near 5-year lows. And the Kiwi dollar is little change from yesterday, still just over 57.8 US cents. Against the Aussie, we're up 10 basis points at 85.9 Australian cents. Against the euro, we're also up 10 basis points at 49.5 euro cents. That all means our trade-weighted index starts today at just over 61.8 and actually little change from yesterday. And the Bitcoin price starts today at $91,276 and down 1.3% from yesterday. Volatility over the past 24 hours has been modest at just on plus or minus 1.4%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. We'll do this again tomorrow.